Hello, traders. This is Blake Morrow, and you are listening to the, what am I doing? Oh, it's the daily Roundup webinar. Well, it's been one of those days. It's only Wednesday, too. It's been a long day already. All right, so we've had some volatility. Now, you know what? Let me stop for a moment, and let's talk a little bit about volatility. When you have VIX, let me pull up the VIX really quick. When you have the VIX is trading at 27, okay, up at these levels, you have to expect that we are going to see some big bouts of volatility. All right, so you know when you're seeing currencies whip around 10 or 15 points, it should be expected. So you've got to do a couple of things. You've got to make sure you're taking on a little bit smaller positions. When you're trading, you can't overexpose yourself, because the last thing you want to do is be stuck in a move when things are whipping around back and forth. Now, in my opinion, it's always easier to make money when there's volatility. You can have it gives you margin for error when you're trading around. But at the same time, you just don't want to be overexposed really aggressively long or really aggressively short in positions when you got things whipping around back and forth. So I just wanted to give you a little, just I want to say, talk, I guess, about volatility, because we are seeing, currencies whip around quite a bit. I've actually had a pretty decent day trading. I've been trading all over the map, especially in the dollar yen. I was trading it on the long side earlier this morning as we broke towards the 110.70. I sold it as we got into the 60s. I bought the dip here, sold it, and then I started getting short and made some money on the short side. So I've actually had a pretty good session trading the dollar yen. I actually shorted when we were rallying in equities earlier. I shorted the US dollar Mexican peso up here as we sold off. I didn't capture all this. I got out before this final drop into the teens. I've left it alone since then. But all in all, we're in a pretty treacherous environment. The markets are whipping around. Obviously, we had the S&P. This is a really key chart. Let's talk about this for a moment. If you were listening on the face webinar, as I'd mentioned, we were probably going to bounce back towards some resistance here and consolidate. Well, that's exactly what is happening right now. Just it happened a little bit faster than I thought it was going to. Hence, the volatility is at, VIX is at 27. You've got to expect these types of moves. We tagged the bottom of the previous spike low back in January. This is post-Iranian, the bombs that went off in Iran. That's what caused that spike lower. And all we're doing is retesting that previous support, which is acting as current resistance. I expect us to continue to grind up around here. So, we're bouncing right now, and quite possibly we can make it to 3,200. That's what my hopes are. Now, let's talk about that for a moment, about where we're going from here as far as equities go. And that's going to help us identify what we're going to do with, some of these pairs like the yen and the Canadian and the euro. And then I'll let you guys go. So when you're seeing this bounce in equities, the problem that we're going to be faced with this evening is that we have President Trump, who is doing his press conference later today at 4 p.m. Eastern. Now, you guys know that's when the stock market is closed. That's a bit of a problem, because even my wife who doesn't know anything about the markets, well, I mean, she knows enough to because we discuss it, but she's not a trader or anything by any stretch of the means. I mentioned to her, I'm like, yeah, well, there's going to be a press conference about the coronavirus at 4 o'clock this afternoon Eastern, and it's actually at 6 o'clock Eastern, I believe, at 4 o'clock this afternoon. She's like, oh, well, after the market's closed, so there's not as much damage in the stock market. And I'm like, yeah, good thinking. That's probably exactly what is going to happen. So I can't imagine there's going to be good news. But so that leaves us, you know, in a kind of a pickle right now, because it's like, okay, do I buy equities because I think they're going to continue to consolidate and recover, or do I look to, just be ready to be on the sell side of risk? Again, how it all translates to currencies is really interesting, because what we've seen is, the euro was ripping earlier on some misinterpreted German numbers or comments, which basically was, municipalities are going to be borrowing money to pay down debt, and a lot of people had thought, oh, that's going to be fiscal stimulus. That's what spiked the euro up, but it was misinterpreted. They're really just borrowing money to continue to pay their bills. So the euro slipped again, and then it rallied back because, again, risk aversion. You see the stock market sell off, the euro is going to spike up. I believe we're in this channel, and I believe the euro's, going to find resistance around the 109.20, support down at 108.50, 60. So if you find yourself at either one of those crossroads, whether it's down here or up here, probably, makes sense to trade the euro. Unfortunately, we happen to be in the middle of this channel, so not much to do with it right at this moment, I don't think. Okay. Also, let's talk about, that's the euro. Let's talk about this Canadian. It's dollar Canadian, which unfortunately I don't have any euro Canadian exposure anymore because we kept stalling up here. The dollar Canadian is threatening a big breakout. This is massive, guys. Just to give you some perspective, this is the dollar Canadian. This is the false breakdown. This is the bull flag that's developing. A move above 133.30 is big, would be big, like big time, because that would allow for a move in the dollar Canadian to, make a rally to 135, but I think and beyond, because it's such a big, massive breakout that I believe you now buy dips, once you're above 133.30. It's a big squeeze, guys. And the market was aggressively long Canadian dollars just, at the beginning of this year. So this move could get really quite unruly if we really break out. I believe that to happen under a risk aversion scenario. So, let's imagine the stock market, as I, talked about earlier on the FACE webinar this morning. If we break this trend line here, or the overnight lows, that's going to usher in some selling of equities, and probably some pretty aggressive selling. That's going to probably usher in some Canadian weakness as well. A couple of the other currencies that are having a very difficult time moving are the Aussie and the Kiwi. They both are trading extremely heavy right now. That's something that you cannot ignore. The Aussie and the Kiwi are extremely heavy, and as much as I keep thinking they're going to bounce, they're just not. And we could be in for some commodity currency weakness, like the Canadian, like Aussie, like Kiwi. And how do you express that? Well, you could trade it either through the cash, trade, or through some crosses. You look at some of these crosses like the Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. They've been basing for a long time, and they are really all on the cusp of breaking out big time. Euro Canadian, Euro Aussie, Euro New Zealand. I don't have to show them to you right now because I want to keep this short. But those are some things. Last thing I need to talk about is this dollar yen. I think the dollar yen has massive support at 10. The problem is if we break down, it's going to be a massive breakdown, because this caught everybody on the long side. If we break lower, there was a massive buyer buying probably about a yard of currency, maybe yesterday at the 110 level. I'm assuming, that buyer's probably out there selling today for a nice profit, but it was a nicer profit earlier today when it was trading at 110.50, 110.60. It gets back below 110, and you're probably going to see a pretty big liquidation, in my opinion. So be careful with this dollar yen. I'm not really too sure what to do with it right now. I was trying to sell it at 111. I was hoping we get to 111 today. that just doesn't seem to be the case, at least not at this moment. So I think the risk is starting to build that you get a reversal lower. So just be careful with the dollar yen. And guys, if you haven't tried out ForexAnalytix, make sure you do so. And hey, you know, I hope you love these webinars, these daily Roundup webinars. If you do, and you use social media, do me a favor, you know, give us a retweet. You know, when we tweet out that that we got this, you know, webinar, really helps us out, helps me out. You know, makes me feel better when there's, you know, more people listening in. So I thank you all for listening in today. Have a great one. I'll see you tomorrow morning on the FACE webinar. Have a good one.